Texas business owners looking to optimize tax savings while maintaining liability protection should consider an LLC with S Corporation election. This powerful combination can significantly reduce self-employment taxes while preserving the flexibility of an LLC structure. An LLC with S Corporation election refers to a limited liability company that chooses to be taxed as an S Corporation at the federal level. This election doesn't change your business structure. You remain an LLC with all its legal protections, but it alters how the IRS treats your income for tax purposes. Texas offers unique advantages for this business structure. Since Texas doesn't impose state income tax on individuals or recognize S Corporation status at the state level, your S Corp election only applies to federal taxes. This simplifies compliance while still allowing you to avoid federal self-employment tax on profit distributions. The primary benefit is paying yourself a reasonable salary subject to payroll taxes, then taking additional profits as distributions, not subject to self-employment taxes. Both LLCs and S corporations provide liability protection by separating owners from their business, and neither entity pays taxes directly on profits. The income passes through to owners. However, they differ in several important ways. LLCs require fewer state filings, have lower startup costs, and offer more flexibility for allocating profits among multiple owners. S corporations, meanwhile, allow owners to split income between salary and distributions, with only the salary portion subject to FICA taxes for Medicare and Social Security. In an LLC, owners aren't considered employees for tax purposes, while in an S corporation, owners who perform more than minor duties are employees. Not every Texas LLC benefits from S corporation election. This structure works best for businesses generating at least $40,000 in annual profit after expenses, with owners actively participating in operations. It's ideal for companies comfortable managing payroll and quarterly tax filings, without plans to take on venture capital or issue multiple stock classes. Businesses still in startup phase, with minimal profits, those planning to retain rather than distribute profits, or those with foreign owners, or more than 100 shareholders, should probably avoid S corporation election. The taxation differences are significant. Without an election, single-member LLCs are taxed as sole proprietorships using Schedule C, while multi-member LLCs are taxed as partnerships using Form 1065. S corporations file Form 1120S and issue Schedule K1 forms to shareholders. The key advantage is that S corporation owners can save on Medicare and Social Security taxes by taking part of their income as distributions. In Texas, an LLC electing S corporation status files Form 2553 with the IRS. The tax breakdown is straightforward. Owner salary is subject to federal payroll taxes, while distributions avoid self-employment tax, but still appear on personal income tax returns. Neither is subject to Texas personal income tax, since the state doesn't have one. However, Texas franchise tax may still apply if your gross revenue exceeds the exemption threshold. Setting up an S corporation election requires filing Form 2553 within 75 days of forming your LLC, or within 75 days of the start of the tax year. Eligibility requirements include having no more than 100 shareholders, all of whom must be U.S. residents and individuals, rather than corporations or partnerships. Additionally, the company must issue only one class of stock. Annual compliance for Texas LLCs with S corporation election includes running payroll and issuing W-2s, filing Form 1120S with the IRS, providing Schedule K-1s to shareholders, maintaining corporate records, and filing Texas franchise tax reports if required. Failing to meet these requirements can result in the IRS revoking your S Corporation election. Texas-specific considerations include registering your LLC with the Texas Secretary of State, using Form 205, filing Form 2553 with the IRS, registering for a Texas taxpayer number if collecting sales tax or hiring employees, and complying with Texas franchise tax rules. If you hire employees, including yourself, you must set up a payroll system, file payroll tax reports, and issue W-2s. An LLC with S Corporation election in Texas offers significant tax advantages for established businesses with consistent profits. By allowing owners to split income between salary and distributions, this structure can substantially reduce self-employment taxes while maintaining the liability protection and flexibility of an LLC. However, the additional compliance requirements make it most suitable for businesses with stable earnings and owners involved in daily operations.